please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
For the market. Okay, 0.39, 0.4, exactly where the pre-market ended. That's where we have opened very close to 10,650 and the Sensex 35,000 crossed, about 100 points higher. Nifty Bank has done better than it did in the pre-market. It's now up 0.25%. And it's the mid-caps that are up and away. HP, BP, IOC are all up about 5%, depending on what you pick. Sun Pharma also higher. Bank of Baroda is higher in the sense, even the first rate is up 2%. That's mainly the stocks that are doing exceptionally well. Any other, red ticks? Okay, I'm just looking for Tech Mahindra. That started in the red. 0.7 down. HCL Tech. Actually, all the rupee related, the tech stocks are all down. Between 0.25% and 1%. Vedanta continues to slip again because of Sterlite woes. But that's the market really. IT down, banks up.
Okay, well, the mid-cap index for now has opened in the green, up about 0.6%. The advanced decline ratio is good. More than 1,000 stocks on the advancing side. The aviation stocks are surging now. Jet Airways is up 5%. Interglobe Aviation is up about 4% on the back of the falling crude prices, of course. Excel Industries is one stock. Very good numbers coming in. So that stock is up almost about 6.5% right now. Sarda Energy has a double-digit gain going for itself, up almost about 11.5 to 12%. Let's take a look at some of these other stocks, that are rallying. The entire fertilizer space is up and about this morning. Nagarjun, RCF, FACT, that whole lot up about 3 to 6%. Volumes are picking up there. You also have sugar stocks that are doing well. Balrampur Chini, etc. Triveni Engineering, all in the green. Praj Industries, all up about 3 to 4%. So agrochemical, that whole pocket is doing pretty well this morning. Looking at some of the result reactions then, let's take a look at Cadila. Margin expansion of 100 basis points is what the management has guided for. So Cadila is flat with a bit of a positive move there. Some good numbers coming in from the likes of Meg Money Organics, Ramkrishna Forgings. Nalco had a sales growth of about 18%. Just keep an eye out on all of these stocks. Himmat Singh Seed, etc. also in the green. Divi's Labs holding up. So is NBCC. On the downside though, you do have a couple of these stocks. Okay, Ramkrishna Forging is actually down about 1.5%, maybe some profit taking there. Shriram EPC is down about 13%. Keep an eye out on that. Tech Mahindra is selling off some more, maybe profit taking there as well. And a couple of these names, Relcom, IDBI Bank, etc., are also a tad bit in the red. But otherwise, it's actually a good opening for the market.
It's a very good opening, and the issue is it opened sort of flat and then picked up. PC Jeweler, by the way, is down 3.5% in opening. So let's see how that one shapes out. Sun Pharma, after opening 5% higher, is actually now up only 3.5%. Ashwini, thoughts on market opening and any individual trade?
See, Bank Nifty we have bought because it's showing early morning traction. Also today, like I mentioned, CEAT is doing very well. So there you can buy. I think Escorts has started off fairly strongly. So CEAT, Escorts, and maybe Reliance was looking for a breakout on Friday. That seems to be happening right now. Overall bullish tendencies, because now the commodity consumer is getting benefited, like unlike earlier when commodity producers had it good. So possibly looking at another good day with more mid-cap participation.
Okay. I'm once again coming to you, Sudarshan, with the same set of questions. Oil marketing companies, which one would be the best to play, or would you play all three, IOC, BP, HP?
No, IOC I wouldn't touch. It is okay. BPCL which would be the best to trade today. And sure. We have forgotten Reliance and Maruti. Oh, both are opportunities for the day. Reliance itself is an oil giant in so many ways.
Okay, well, L&T ahead of its numbers is also trading in the green. Prakash Gaba wanted quick thoughts on how to trade L&T today. It's had its fair share of an up move. It's moved from 1100 to almost 1400 now. But how would you trade it?
I think we'll trade on the long side, like the move that started today. Perhaps we can see a move around 1370 zones or so. Stop below 1340 on L&T, it's just fine.
Thank you very much, Prakash. Sorry, you were going to say that?
No, I was going to thank Prakash.
Thank you, Prakash, for joining us. Well, actually, markets are settling in with the Nifty now moving to a 0.5% gain, and largely on the strength of the oil marketing companies. Yes Bank also is having a good day. Axis is having a good day. Actually, private sector banks are having a very good day, and the Nifty bank is surprised, the one that's leading the charge. I expected PSU banks and NBFCs to do exceptionally well, but now you have even the private banks joining the brigade, and therefore Nifty bank charging ahead.
Some NBFCs are doing well, by the way. Just pull out the intraday chart of M&M Financial and also Piramal Enterprises, which comes out with numbers today, and that's one area where you're seeing quite a bit of buying, early morning buying today. So these are a couple of names that look good. Okay, so Ashwini, before we let you go for now, what's the big call for the day? What stock would you be chasing?
I think CEAT and Escorts both look good. Overall, I think the banks have started fairly strongly, and maybe another strong day on Bank Nifty. It actually came off on Friday about 100 points, so that it's making up. So now possibly some amount of strategic shorts also may start to cover, but IT looks like it's going to give back, so that should have a fairly soft day.
Okay, by the way, Manpasand beverages, we should just pull that up. It's down quite a bit. I think it's down about 20-odd%. That's what my team tells me. Yeah, 20% down circuit there on Manpasand beverages. Not only has the auditor resigned, but even brokerages like Kotak have now suspended their rating on the company. We saw this happen the last time around as well. There was a huge knock after those issues cropped up, and once again this has come through.
PC Jewelers, by the way, after starting with a minor green, with a big green bar, is now down 5%. So clearly the market is latching on only where they have comfort at this point in time, but it's a big rally. No taking away from that. It's 10,660 as we speak, and the Nifty Bank is up 0.7. That's a 170-point rally in the Nifty Bank. A great scenario. Gentlemen, thank you very much for joining us, and we will, of course, invite you yet again for your 10 a.m. trades. Let's invite our market master for the morning. Dipen Seth, Head Institutional Research at HDFC Securities, joins us in our studio. Good morning, Dipen. Always a pleasure having you with us. Well, let's straight away get to stocks, because there is quite a bit of a surging rally over here. Assuming that crude is going to oblige and at least 80 plus is not looking immediately on the anvil, would you say that at this point we should be buying oil marketing companies, NBFCs, any of the beneficiaries?
Yeah, so you can play the volatility, as it were. Just because crude has come off 79 kind of levels, we are saying maybe it won't go beyond 80. 6 months ago, nobody would have imagined that it could settle comfortably over 70. So we can end up chasing prices like most analysts. The other way to look at it is, are we structurally entering a high crude zone? And does that structurally affect our economy? And at the smallest sign of selling off in crude at higher levels, so again you have the betas running up. So this is how it will continue for a while. Actually, the big picture is quite confusing and volatile, if you ask me right now. And there are equally good arguments on both sides on whether we are in a structural bull market, or is it that after a great 2017, are we going to go nowhere over 2018? And in fact, could there be a big crack lurking around the corner? And let me tell you, seeing both sides of the argument, it's difficult to take a very definite call on where markets might go. So if you ask me what's going to happen in 5 years from now, I'm very, very constructive on India. But there is high crude prices, some of which is let off, of course, and oil marketing companies are jumping off their cracks of 30, 40, 50%, or I don't know where they are, right? So you can play it on a day-to-day basis, or you can take a 2, 3, 4 year view out and say, that I really don't care what happens with political uncertainty, what happens with the weak rupee and high crude prices. I will buy what I think works for India in the long run.
Okay, by the way, today it's just about the currency move. Now it's in fact the dollar rupee is to almost 67.35 thereabout, right. And you're seeing a big move. Tech Mahindra, for example, after delivering great set of numbers, is down 3% and is the top Nifty loser right now. They've been good morning. So has that sort of trade reversed for good, or is it still going to give you more bang for the buck if you buy?
No, it's very much on. If you look at what's happening in Tech Mahindra, they have assiduously worked to improve margins over the last 4 or 5 quarters. They're doing some significant cost cutting in their non-performing babies, as it were, whether it's an LCC or Comviva, and they're now looking at actually growing their telecom business, which was sagging for a while, especially as 5G networks come into play. The rest of their business, the enterprise business, is actually growing at 16-17%. So I don't think there is anything fundamentally wrong with the company. And if you look at the kind of numbers that we've built into our estimates for the next 2 years, I think Tech Mahindra is available for about 13x. Now, at a time when the rupee can't strengthen beyond, let us say, 66, 67, if I was to put it that way, at a time when oil prices are unlikely to crack below, let's say, 65, and at a time when the IT sector has pulled back from a perceived abyss. A lot of us were willing to write off the IT sector a year and a half ago, and look at the magnificent way in which it's pulled back. So 13.5x on a large company, 60-odd thousand crores market cap, doesn't look too bad to me at all.
Okay, so that's the valuation argument that you have been making for a while. You've also made that argument with PSU banks. I mean, you know, Bank of Baroda, SBI, etc. You think the risk reward is favorable now that, you know, a lot of the cleanup is done?
Yeah, so a lot of the cleanup is done is something we've been fantasizing about for, I don't know, I think the last 8 quarters, maybe more. And every quarter we feel that...
We were also fantasizing about earnings growth for the last 4 years. Second half when the earnings growth will come. It's come now. So, I mean, therefore, would you say that even in PSU banks, a benefit of doubt can be
I'm very happy you asked that, Lata, because this quarter's note that we published on Bank of Baroda has a headline called The Final Countdown. Okay, it's a final countdown in 2 ways. One, that at 11% or whatever it is, we think GNPs have perhaps peaked out, because now the RBI has really applied the jhadu, so to say. So it was all kinds of bank managements which were saying we've recognized pain and there's no more, and then there was some more thing happening on the restructured book, and there was a watch list and this and that, and we've seen Axis go through that for quite some time. But now the RBI said, okay, end of restructuring as we know it, and this is it. You need to recognize all the stress, and if this isn't a peaking out, then we'll never see a peak out. Okay, so there has to be some sense of a final countdown now. The second sense in which it's a final countdown is that is a CEO change coming up, and we've been reposing faith in Mr. Jayakumar for the last few years, and he's gone through an awful time in terms of steering a troubled ship out of trouble, and we believe he's just at the verge of being able to do it. And if you forget the legacy worries that he inherited, all the stuff that has happened under his tenure has been constructive for the bank, whether it's a tight fix on OPEX, whether it's risk-based pricing for incremental lending. And although I concede that there hasn't been too much seasoning in the incremental lending which has happened, there's very little sign of incremental stress there. They are one of the few banks who've been able to hold on to NIMs in this asset quality crack, which tells you something about the way they're pricing their incremental lending. And if the stress isn't showing up in an incremental way, it's only the past sins which are being cleaned up. I think I'm looking at BOB at one time FY20 ABV, but remember, the ABV doesn't change as much because of reported profits and losses as much as it changes because of changes in asset quality. So PSU banks are a complete high beta play on asset quality. And if your IBC resolutions play out, if the economy straightens up, then I think even SBI is at about one-time book adjusted for subsidiary value.
Okay, so that's quite a convincing argument. Let's see if the market gets convinced or not. But talking about these IBC and NCLT resolutions, what about the private sector corporate banks that have also been, you know?
So there's ICICI and Axis which immediately come to mind in terms of the large banks, which are large private sector banks, which are exposed to this big corporate stress blowout, as it were. Again, the pullback there could be almost as good as what the pullback might be for the PSU banks, who are obviously even more exposed to IBC/NCLT pain and now healing as it seems to be playing out. You need to watch asset quality at these banks very carefully. The beautiful thing about both Axis and ICICI, we are more constructive on ICICI, is that there are other parts in their business which look very interesting. And Axis has a creditable retail book now, which is some 35, maybe 40% of its advances. ICICI has a whole lot of interesting subsidiaries where it's creating value. And also it has a fabulous retail franchise, a great deposit franchise as well. So if they get their act into play, I think both these banks can deliver value. We have a buy right now on ICICI. We want to watch. We don't think the big pain has still been recognized at Axis and the bad news is still completely out. Although the cleanup has happened, Bain has put in money, they've recognized stress. I think we'll probably wait a quarter for Axis.
Okay, by the way, the
down is that is a CEO change coming up, and we've been reposing faith in Mr. Jayakumar for the last few years, and he's gone through an awful time in terms of steering a troubled ship out of trouble, and we believe he's just at the verge of being able to do it. And if you forget the legacy worries that he inherited, all the stuff that has happened under his tenure has been constructive for the bank, whether it's a tight fix on OPEX, whether it's risk-based pricing for incremental lending. And although I concede that there hasn't been too much seasoning in the incremental lending which has happened, there's very little sign of incremental stress there. They are one of the few banks who've been able to hold on to NIMs in this asset quality crack, which tells you something about the way they're pricing their incremental lending. And if the stress isn't showing up in an incremental way, it's only the past sins which are being cleaned up. I think I'm looking at BOB at one time FY20 ABV, but remember the ABV doesn't change as much because of reported profits and losses as much as it changes because of changes in asset quality. So PSU banks are a complete high beta play on asset quality. And if your IBC resolutions play out, if the economy straightens up, then I think even SBI is at about one-time book adjusted for subsidiary value.
Okay, so that's quite a convincing argument. Let's see if the market gets convinced or not. But talking about these IBC and NCLT resolutions, what about the private sector corporate banks that have also been, So
there's ICICI and Axis which immediately come to mind in terms of the large banks, which are large private sector banks, which are exposed to this big corporate stress blowout, as it were. Again, the pullback there could be almost as good as what the pullback might be for the PSU banks, who are obviously even more exposed to IBC/NCLT pain and now healing as it seems to be playing out. You need to watch asset quality at these banks very carefully. The beautiful thing about both Axis and ICICI, we are more constructive on ICICI, is that there are other parts in their business which look very interesting. And Axis has a creditable retail book now, which is some 35, maybe 40% of its advances. ICICI has a whole lot of interesting subsidiaries where it's creating value. And also it has a fabulous retail franchise, a great deposit franchise as well. So if they get their act into play, I think both these banks can deliver value. We have a buy right now on ICICI. We want to watch. We don't think the big pain has still been recognized at Axis and the bad news is still completely out. Although the cleanup has happened, Bain has put in money, they've recognized stress. I think we'll probably wait a quarter for Axis.
Okay, by the way, the stock of the moment now is Bank of Baroda intraday. If you see, it sort of made a bit of a low after opening, and from the low point, I think it's now up almost about 3 or 4% from the low point. So almost repeat of Bank of Baroda kind of.
I was expecting that Bank of Baroda will get the reception that SBI got. And in a minute, is it time to play the Bank of Baroda chunk? Okay. I mean, I did speak to Jayakumar on Saturday after the numbers. And I think there was confidence in every word that he was telling us.
It has always been there.
And I think it would be very good to just straight away get to what Mr. Jayakumar is telling us. Listen in. I began by asking him about the asset quality and whether all the bad assets are now more or less cleaned out. You start with 12,000 odd crore, 12,300 crore of fresh slippages. How much of the S4A, SDR cases are part of this 12,000?
I think about, if you want a specific number, is 3,846 crores.
Okay. But in that case, your S4A, when you last spoke to us, was 3,800, your SDR was 9,400. So should we expect that some of these, or many of these, if I take your S4A and SDR as recognized at the end of the third quarter, that comes to about 13,000 crores. So therefore, if you only recognize 3,800, should we expect, a big burst next quarter as well?
No, it's, see, the provisions have been with respect to failed SDRs. Okay. So those hopefully stay to the plan. There's always a risk. But remember, these have been downsized in the loan book to what is considered to be sustainable. Okay. So on the balance, I would think we should be okay.
Okay. You've given us a new watch list of about 10,000 odd crores. How much of this is included in your watch list?
Well, we specified the watch list. It includes SMA2, it includes SMA1, and it also includes some of the restructured portfolio. Okay. So it does cover that.
Okay. Therefore, you can be now if I look at your 12,000 crore, about 4,000 crore are your SDR, S4A cases. Outside that also you have about 4,000 crore of corporate loans and 4,000 crore of other loans. How much of that may be repeated? Because they are outside your restructured standard book?
So the SMA2 portfolio has considerably come down. I think it's probably around 5,000 crores or a little lesser.
Okay.
So there is reasons to feel that that the 10,000 number that we're given, or rather more a range between 10 to 12,000 we're given as watch list, is possibly the number that we're looking at. Now let's for the time being assume all of this slip, a scenario that is possible. Then we have to look at what is the likely recovery. And then that brings us to questions, what is recovery with NCLT and without NCLT? If we go back to the last year, we've recovered about 5,600 crores without any NCLT matter. So let us say that's a number that we have got. So therefore, our provision numbers would be equal to, let's say we recover 6,000, 7,000, whatever it is. Let's say we have a 4,000 to 5,000 gap.
Yes.
Then there is a provision on that. Then there is an aging provision that will further take place. Those are the two numbers that we have. But whatever that number turns out to be, it should still be substantially lower than what we have had and should still leave a room of margin for profits. And I still think that we have a reasonably good case of hitting a double-digit return on equity in this financial year.
Okay. Would it be, say, therefore 11% return on equity is possible?
Even if it is 10, that's good.
Okay. And
but we're quite optimistic that that should be possible.
Okay. So would we return to a quarterly run rate of slippages of what, 3,000 crore? What should we...
Well, I don't think, the problem with all of these things is you cannot expect to divide it equal. I think there's a bias in favor of the first quarter and the second quarter. After that, I think, because, those who are in the boundary line are going to fall off early than later. So I think there'll be a bias towards the first two quarters, and thereafter it probably will slow down. Okay. See, one of the points that one has to note is while the slippages were high last quarter, and rather the last year and the year before, the recoveries were not quite to the mark. One is hoping that this NCLT will give us some momentum in terms of getting recoveries to a better state than what it was before. So surprises, if any, on the negative side would also be made good by better recoveries compared to last. Okay. So mentally, I'm thinking that let's assume 10,000 crores or 11,000 crores as a flow and 5,600 or 6,000 as a recovery. There is a gap of 5,000 crores.
Okay. Now,
so this 10 or 11 goes up, the NCLT goes up, it still keeps me there.
What is your exposure to the steel companies in the two NCLT sets?
Our exposure to steel companies is in the first NCLT. The other ones are not, are a small sized one. And luckily, with respect to that, we're beginning to get a lot more positive with respect to the provisions we have taken and the potential recoveries that are there. Okay. So I think the first list is not something that should worry us. Some amount of recovery has already happened in this quarter on account of the Bhushan transaction. I think our reversals are probably in the order of 170 crores or thereabouts. So that is kind of locked in, and but the list 2 is a list with a higher level of likely losses, and we have a coverage of 55% on them, and I'm hoping that, or rather not hoping, our estimates are that we would make better recovery elsewhere to pay for this. So if you were to look at the surprises that could potentially happen in Q1 with us, is around the NCLT provisions, particularly if we have to do the 50% and the resolutions do not take place, and therefore it moves issues from this quarter bucket to the next quarter. But cumulatively, it should not again have an impact, except for a quarter-to-quarter breakage. That's one area. The other area I've been thinking about, I don't know how right I am. You see, today the fraud accounts which are identified to have frauds have a 100% provision requirement, and fraud is a very wide terminology, including diversion of money. And there are a lot of accounts that are under forensic audit, not necessarily by us, the lead bankers, or elsewhere. So if any of these accounts are called in, then there may be no incremental NP, but there could be an increase in the provision numbers, right? But taken the year as a whole, I'm expecting things to even out. So in a worst case scenario, we could have a Q1 that's not that, is not that
flat.
There's probably flat, we make little money, and maybe Q2 also looks that way, but 3 and 4 should look good. But overall, we stay with this with the view that an asset growth of around 15% and return to close to double-digit return on equity is pretty much likely, or the probability of that is very high.
Just one more number on asset quality, and I want to speak about growth. Do you have any estimate of how much may the recoveries be from the NCLT cases? I mean, at least in steel, there is some visibility.
You know,
So
my mind works slightly differently. I look at the provision and the realizable value and think about what is the difference between the two. Because that's what is really going to impact us in that sense. In the first list, it is not significant. It probably evens out. In the second list, it will depend upon how these things play out. In our assumption, a number of accounts, we have taken very, very small realization. So the gap is around 800 to 900 crores there.
Oh, okay. I mean, actually, even in the SBI case, I was a little surprised that people were not terribly worried about the second list. I'm worried about power assets. Yeah. I'll go from the macro. In power, the APP, the Association of Power Companies itself tells us that it's quite possible that about 1.5 lakh crore of power assets can go to the NCLT unless because they don't have a PPA. It's about 19,000, 20,000 megawatts of power without PPA. Now, if you look at that number at a macro level, and if that goes to NCLT, then, you know, provisioning and who will buy power assets without a PPA? Have you factored in that scenario, and what is your exposure to power?
So, when I did the calculation last, our exposures are typically on the 2.5% level to the industry exposure. Okay. Now, in the power exposures we've got a large number of good clients. This is because these are all completed projects, renewable or thermal, mostly renewable, that are and some thermal that are supplying to private entities as well as centrally owned organizations as well as the various government sectors. So that we think is somewhat reasonably safe. Many of the other power exposures for us are there are many, but they're all small exposures, 200 to 50 crore exposures. So we have kind of accounted for them. Some of these things we think will head towards 100% provision because the project will never see the light of completion. So we factor that in. And finally, we have one power company where it is not an NPA because of a court order. But we have started taking provisions on them. So in general, I think if we stress our portfolio to say that let's take a unit cost of 4 rupees per unit and then work backward as to what is the amount of provision we take, we probably would come to a reasonable number. But then there have been other things as well. If you look at the increase in the trading cost of power, that has gone up substantially. So that should signal some kind of a normalization that is happening. So it comes back to the same thing again. There are two types of assets over here, one that are completed and one that are not completed. Completed, whether there is no fuel supply or there is no linkages, that will resolve itself out. Because when the when these kind of price increase, it will sort itself out. The problem is where there is not completed, and the problem is when there is a significant price escalation. We have to factor that they're pretty much gone.
Okay, that's the management of Bank of Baroda, but we need to look at the rest of the market as well. Sun Pharma is surging now. It is your biggest Nifty gainer, up almost about 6% post its numbers. I think the street definitely liked the fact that the margins have improved and the management has guided for a revenue growth as well in the next fiscal. Apart from that, Kotak Mahindra Bank, by the way, is sitting at a new high today. It's crossed that 1300 mark, so don't lose sight of that. We'll take a short break on that note. We'll come back with lots more on the markets and reactions lined up. The Managing Director of Sundaram Finance, Mr. T.T. Srinivas Raghavan, will be with us.
Welcome back. We now come to one of the bluest of blue chips, Sundaram Finance. It's a strong AUM growth, but it's not quite translated into an income growth or disbursements growth. T.T. Srinivas Raghavan, Managing Director, Sundaram Finance, joins us now. Good morning, Mr. Srinivas Raghavan. Thank you very much for joining us. Can you explain this discrepancy? I mean, disbursements are actually down on the quarter and even year on year up only 2.2%. You did not lend everything that you got back?
No, I think I don't know whether we're looking at different sets of numbers, or I don't know if there's a confusion between standalone and consolidated. The numbers are like this. For Sundaram Finance, for its operating business, disbursements grew by about 18% year on year. The quarter was muted, that's right. But for the whole year, it was growth of 18%. And in terms of revenue growth as well, I think from memory, 700 crore versus 600 crore in Q4. For the whole year, again, profit growth is about 16%. Part of the problem this year has been we went through this demerger, which you probably recall from an earlier conversation. So all the numbers are not exactly like for like, because The demerger took effect in Q4, I think January 18th or something. So a lot of the numbers got distorted in a sense, because it was not like for like, which is why I'm sort of disaggregating the numbers for you. So if you looked at it for the whole year, it's on a comparable basis, on a demerged basis. Last year's PAT was 460 crore, and this year's PAT is 533 crore.
Okay. Actually, I was waiting for that. Mr. Srinivasaraghavan, I mean, I should have put that in the preface. I wanted the like-to-like numbers because of that demerger of your non-financial investments. And we were running your full year revenue as well, and that that we are, writing out the numbers that you said. But can we come to margins then? We don't have your margin numbers. How have they done vis-a-vis previous years?
There has been a slight compression, margin compression. I think, top of my head, NIMs last year were 4.96, meaning previous year. This year, I think they're down to about 4.76 or thereabout. So there has been some margin compression.
Okay. Mr. Srinivasaraghavan, good morning. I wanted a little more color on how the business could shape up over the next 1 year. The last time when we had spoken to you, you said, of course, the core business is doing well, but you see significant growth opportunities in the construction finance, light commercial vehicle finance, as well as in the tractor finance business, if I recollect correctly. What kind of growth rates are you looking at from these pockets?
Spot on. I think those were exactly the three things that we talked about last time, and we're holding to that. In fact, if you look at our numbers for FY18, those are all segments that have contributed well to our growth, and we see that trend continuing. Reason, of course, I think the infra story is very, very obvious, so I don't think I need to expound too much on that. So that explains the construction equipment part. If the early projections on monsoons hold, then that explains the tractor part. The LCV thing, really, we are seeing as a direct fallout of GST, because now what we're hearing anecdotally is that there's a huge increase in warehouse capacity that's happening all around the country. And because goods now move freely, I think the hub and spoke, which we've talked about for decades, is really now starting to play out, which means short-haul transportation could become a really big play, which is why we see LCVs as being a very high-growth segment.
So when you say high-growth segment, what are you looking at for the full year? Not only from these three pockets, but overall in terms of disbursement growth, are we still staring at about 18-20% disbursement growth?
18-20 is a little hard to say, because bear in mind that as we go into H2, we're also sort of heading into election season. So we don't know how that's going to play out. I think if you look at CM's numbers, they've talked about low double-digit growth in CVs and LCVs and high single-digit in passenger car. So I think our numbers are sort of around the same ranges, give or take a little bit, but low teens to mid-teens, I would think.
Okay.
And because there are some uncertainties also around oil prices, so how much that will impact the commercial vehicle sector is still a little bit of a wait and watch.
Okay.
And as you know, we never stick our neck out on growth numbers. So these are best estimates with whatever knowledge we have at this time.
But on the other hand, tractors have actually done very well, and we got fairly positive, optimistic statements from the tractor makers we spoke with this earnings season, as well construction equipment actually. So what is the sense you're getting that even if there was a bit of a slowdown in some parts of the CV, you would be able to see much more optimism in the other two, construction equipment and tractors?
I would agree with that. I would certainly agree with that.
Okay.
And also for us specifically, because these are relatively smaller portfolios, rate of growth could therefore look higher. But I agree with you. Yeah, I think that point is fairly made.
What about margins, Mr. Srinivasaraghavan? Would you expect that you can maintain at 4.7? I mean, cost of raising money in the market has gone up considerably. You'll be able to pass it on?
Yes. Well, that's the hope, right? I mean, that's what every CEO and every CFO hopes for. And, we're going to do our best to try and pass it on. But I'm not going to pretend that it's easy because as you rightly say, cost of money has risen quite sharply, especially in the last few weeks. And with this whole oil tamasha going on, I don't know what that's going to do to the rupee and what other knock-on effects it's going to have. Plus, also, I think the original commentary was that Reserve Bank would stay put till December, but now one is starting to hear noises that it could happen even earlier. So I think there's a few imponderables here. So yeah, I think we'll have to work really hard.
Sure. You have spoken about 10,000 crores of fundraising in FY19 in the past, but can you tell us exactly what the plan is? What is the kind of fundraising you're looking at in the first tranche? What's the timeline?
No, I think 10,000 is what we're projecting for this year. Last year was, I think between term loan, securitization, everything, it was about 9,000 something. So we're looking at about, 10, 11,000 crore is the quantum of resources that we're looking to raise this year as well.
Okay. All right, Mr. Srinivas Raghavan, pleasure speaking with you as always. Thank you very much for joining us and giving us a sense of how business might pan out. Growth, yes, in several pockets, but cost of money will go up.